Good morning, everyone. So delighted to be here today to talk about a new era for finance. So I'm not sure if any of you have had the same experience as I have at the forum over the last few days, but I feel like there's almost two separate conversations happening here. There's one set of conversations about geopolitics and macroeconomics. This is a set of conversations worried about the fragmentation of the global trading system, about debt, the role of the dollar. These conversations can be quite depressing, quite worrisome, and it really been a big focus of a lot of the discussions here. Then the other big focus of the discussions has been on AI and innovation and technology. And this is a really exciting set of discussions about the possibilities for the future, all these exciting new developments going on. For example, I was at a dinner last night with some MIT colleagues, and they were talking about how AI is allowing them to advance their scientific breakthroughs even faster than before. They're doing things like they're making water out of air. You can think about what that could mean for space travel, for example. Talking about how they're using AI to break down the structure of cells in plants so that plants can adapt to global warming. And this is really exciting stuff. But it's a real disconnect with then the much more depressing macroeconomic and geopolitical discussions. So in this panel today, we are going to take the bold step of trying to merge these different discussions. So we've now had a couple days to warm up, so we're now going to try to bring these themes together. And more specifically, we're going to talk about innovations in financial markets, including not just how these innovations are occurring, what the future could bring, but also think about the regulatory and geopolitical backdrop that these are occurring in and how the regulatory and geopolitical backdrop can affect these innovations in finance. So I hope you had your coffee. We've got a lot to cover, and these are big topics, and exciting to try to bring these big themes of Davos together in this panel. But anyway, the theme of the panel is about how technology is rewiring global finance. And for those of you who follow this field, there is a lot going on. There's a lot going on in forms of payments and currency. There's a lot going on also in the plumbing, the pipes of how financial transactions occur. It's a lot to keep up on. So to just get us started, I want to go down, and I'm just going to go in the order you're all seated, and ask you what you think is the rewiring that is the most consequential. What is the development you are most excited about? It could be a segment of markets, what's going on in private credit, investing, Bitcoin, stablecoin, digital currencies. It could be in technology, Bitcoin ledger technology. It could be in more plumbing-related issues. I leave it really wide open just to get us going. Talk about what you think is the most exciting new development that is going to have the longest-term impact in finance.
Well, I look at a very narrow segment of the financial market, which is basically cryptocurrency, blockchain, Web3, however you call it. I do believe that this technology is a game changer for sure. And I think we've proven over the last 15, 16 years that it's not going away. Binance is one of the largest crypto exchanges in the world.
It is the largest.
It is by far the largest. It's larger than the next 5 combined. But just some numbers, right? It has 300 million users. It's probably larger than any bank that I know. And its trading volume is higher than the Shanghai Stock Exchange. It's higher than New York Stock Exchange last year. So but right now in the crypto space, there's really 2 proven industries, the exchanges and stablecoins. Those are large businesses. I'm really excited about 3 new more. I think tokenization is a huge one. I'm talking with probably a dozen governments about tokenizing some of their assets, because this way the government can actually realize the financial gains first and use that to develop those industries, extractions, the trading markets, etc. Payments is something that we've tried, have not really conquered have not really started in crypto. We tried, but nobody really pays in crypto. But I think now we're seeing the convergence of traditional payment methods being behind the scenes, being supported by crypto. So the spenders swipe a card, crypto gets deducted from their account. The merchants gets US dollars or euros or whatever they get. So now when we have those bridges, I think payments is going to become pretty big. The third one is what you guys all mentioned is AI. The native currency for AI agent is going to be crypto. They're not going to use bank cards. They're not going to swipe credit cards. Crypto blockchain is the most native technology interface for AI agents. So when AI goes big, today AI don't really they're not really agents. They don't buy tickets for you. They don't pay for restaurants for you. But when they actually do, those payments will be in crypto.
Okay, so there's the best case scenarios here. Here's what to get excited about.
Yeah.
Now I want to shift gears a little bit about whenever we have a period like this of lots of innovation, experimentation, some succeed and some don't. So I want to think a little bit about what might not work. In 10 years from now, if we're sitting on a panel here in Davos, what is one development we might be talking about today that's not even discussed? It's sort of gone by the wayside. Let me just to get you thinking, give you a couple ideas. So a lot of excitement by all of you about AI. There's also some work going on at MIT where they've come out to show that AI is great to do a lot of work really quickly, but it's sort of mediocre. They call it work slop. You can get sort of 80% accuracy, and if you're fine with that, AI is great. But if you really want to be the best and get things really right, there may be limits. Also, an experiment with Bitcoin. El Salvador worked very hard to push Bitcoin. A great way. El Salvador is very reliant on remittances, doesn't have its own stable currency. It seems like a logical place that Bitcoin could really take off for remittances, reduce transaction costs, and there's been almost no take-up, despite a lot of marketing and a lot of work. So there's just a couple of the potential limitations just to give you some time and get you thinking. But now let's go down, same order. What is, again, something that people might be excited about today, or at least some people are excited about today, that you think is not going to be even in the discussion 10 years from now?
Yeah.
Okay, CZ, what should we worry about, or maybe not place our money on right now?
Sure. I think my three panelists have been very smooth and politically correct. I'm going to give some more direct answers, which will probably offend quite a lot more people, including my own people in my own industry. I do agree with Stephen that I think, look, even if you asked me this question 10 years ago, I would probably said Bitcoin payments. And 10 years later, we're not quite there. So I'm still skeptical about payments. We're working on it. We as an industry, we're investing in many payment projects. But I think as in any innovation field, there's always a very high degree of failures. But the small number of successes will be exponential, right? I also echo Stephen with what Stephen said about metaverse. Well, we saw NFTs was pretty hot for a while, but now they're kind of pretty quiet. Mm-hmm. I have a very strong feeling that memes are probably going to be similar. I could be wrong. I think a lot of crypto guys will hate me for saying this. Mm-hmm. But these are very high risk new areas where the value is highly speculative. Building use cases for those are hard. Some memes do stay, like Doge, been around for like 15 years, and they still have a couple $1 billion of market cap. So there are things that have culture value that can stay. But I think most memes probably will not last that long. And then I also want to add, to offend the other industries, I think brick-and-mortar banks will decrease significantly over the next 10 years. So
decrease.
People will have much less need to go to a physical bank. I think ING pioneered online banking, and that was like 25 years ago. So it takes a long time to replace the old industry. But now we have cryptocurrencies, we have blockchain. The need for going to a physical bank to do stuff, now we have eKYC, we have e-everything. So the need to go to a physical bank may decrease. I don't think banks will disappear. They serve a very important purpose, many important purposes. But all of these industries, even new ones, traditional ones, they all have risks. So we should just look at the space on a periodic, careful basis.
But you only told us what has failed for the last 10 years. You haven't told us what will fail 10 years from now.
Well, we're basically saying, look, memes are high risk. Physical banks are high risk. Yeah, I can go on, but then I'll offend more people.
Yeah.
But physical bank is not innovation, though. It lasts like 17th century, right?
Yeah. No, I think, though, your last point is really important. I want to push on the banks. If you put some macroeconomists in this discussion, they would really be focused on the risks to banks. As finance flows through other channels, through other mechanisms, banks are a critical source of financing for investment and growth, and especially small companies, and especially in Europe, but with mixed significance around the world. But so if some of these new forms of finance take off, the role of banks could decrease. They could have less funds. Funds will be channeled through other mechanisms. So I particularly wanted to hear from Stephen and Jaylee. You're more closely linked to the traditional banks, although you are innovating in the new space too.
Very much so.
But how concerned are you about the traditional role of banks? Are we going to be looking at very different banking systems in 10 years?
A couple of points to add to that. I think I can dissect that into a couple of different separate points. I think number one is if everything else stays equal, being faster and cheaper is always better.
Yeah.
That itself does not create more risk. What's the risk there is, it's just faster will make it appear faster to happen. But if banks are fractional reserves. So if the bank doesn't have enough money, just because people can withdraw money faster, that's just going to expose the problem faster. But making it slower doesn't solve that problem. It just means more consumers couldn't withdraw when they want to withdraw, so they're stuck. That doesn't solve any problems. So if everything else stays the same, technology that makes things cheaper, faster is always better. On the Silicon Valley Bank, when you describe the question, in the crypto industry, we have a different kind of rumors or feel to it. The bank may or may not be in trouble, but our impression is the bank is very crypto-friendly. It may have been shut down by Operation Choke Point 2.0 back in 2023. I'll also give another example that happened to Binance. In December 2023, this is after the FTX went down, after Luna, UST, after Silicon, this is before Silicon Valley Bank, actually. In one day, there was maximum withdrawal of $7 billion equivalent of assets from Binance.com. No issues. In that week, there was a few days before that, it was up like a couple hundred million, a billion, and then 7 billion, and then a billion, a billion, a billion. In that week, total $14 billion worth of assets got withdrawn from the platform. No issues. In a bank, I don't know of any bank that can handle that. So when the term bank run, it's mainly because the design of banks are fractional reserves. When you have a fractional reserve system, then you have this liquidity issue. So that comes down to the systematic design of the system, not so much AI. So that's kind of my view. Yeah, the AI does have the problem of synchronized action potentially, but I think that's a very small. We're looking at a very small thing to blame the entire problem on. My view.
Okay, so I got some different ideas. So what was going to matter is settlements, risk management, and also regulation, including reserve requirements, things like that. So some of this has to be done within each company, but there is also a role for government and government regulation and all this, and government and infrastructure in the country. And this is where we are very lucky to have a rich panel where we have people who, all of you operate internationally, you operate around the world, but you each are at least based, or your company is based in different countries. We have the Netherlands, the US, China, and UAE. So I was wondering, could each of you talk about how important is the regulatory framework? I'm going to start with you, Fred. In particular, different countries are taking some different approaches to how they manage some of these different risks.
Yeah, I have a different perspective on this issue because we're sitting in a different industry. Yeah. It feels to me personally like the banking industry, the securities industry, the regulations are highly developed, highly mature, and they are highly similar across countries. I know there are differences. This is probably a novice person looking at a problem in a very simplistic way. Whereas for crypto regulations, it's different, very different in every country right now. To be honest, well, Binance has like, 22, 23 licenses all around the world, but the majority of countries don't have licensing regimes today in the world. And we also see US is progressing very quickly, but it's in progress, right? So the market structure, the Clarity Bill, the market structure bill, the Genius was passed last year, so that's like 6-7 months ago. So this is a in progress thing. We also see many other countries. UAE has adopted fairly forward regulations. Bahrain, Pakistan, Kenya, we're glad to be in the consultation process together with them, so that they at least talk to industry players. I'm a personal advisor to some of these governments, even though I'm not a regulation expert, but I just tell them from a market player perspective. Also, in this process, there's some key differences in countries' policies, especially when it comes to capital controls. Many countries, when you take money out of the country, they have a limit. Above that limit, that becomes money laundering or basically illegal, however you call it. US doesn't have this issue. It doesn't have this control. Taxes are very different in every country. So this kind of affects financial regulations because, especially if you buy Bitcoin, the price goes up, do you pay tax or not on the unrealized gain or realized gain or whatever, right? So we think that obviously more clarity, more consistency will be much, much better. But I don't think a global regulator will work. Is possible at this moment. Different countries have different priorities, different agendas, different considerations. So a global regulator will be quite difficult. We would love to see it, especially if that global regulator can put in a positive regulatory framework that's relatively pro-innovation. And that will make the industry players' job a lot easier. But to be honest, logically, it should be like that, right? Because crypto is the same in every country. It doesn't change country to country. So there should be an optimum framework that we should be able to put in. So I'm actually spending a lot of my time trying to figure out what that is and how to work with different countries.
That's great to hear. I agree. Right now is probably not the time to launch a new global international organization, a new global regulatory framework. That's a big uphill battle. But that doesn't mean we shouldn't start thinking about what it would look like if the opportunity does arrive, especially if we have some sort of crisis, some sort of major financial meltdown. Yeah. We might want to have some ideas and plans ready to go to put something in place.
What might be easier is regulatory passporting. Like once you get a license in one country, a number of other countries recognize that. And that just requires the regulators in different countries to have some kind of agreement. We've seen some discussions of that already. I think that step most likely will happen first. Making a new regulatory body or even a forum is making a global organization. It's very hard to push down to the execution levels, and it takes time. Yeah.